Are you ready to uncover what's really shaping Calgary's real estate market in 2025? From groundbreaking opportunities to potential challenges that might actually catch you off guard. Today, we are breaking down the headwinds and tailwinds that face every buyer, seller, and investor, not just in this city, but across Canada. If you are serious about staying ahead of the curve, then this is a video you definitely want to watch. Well, let's dive right in, because those who know win, and those who don't, let's not let that be you. We are going to be covering everything from what happened in 2024, the current supply and demand situations, the economic factors that affect the Calgary real estate market, the political dilemmas that are confusing all of Canada, and finally the hot topic, the rates. What's going to happen with different kind of rates going forward in 2025. So first off, let's go through the summary of 2024 for the Calgary real estate market. What were the trends that were set? What were the dynamics that shifted as we went through the year? When we started off the year, there were a lot of fears around stagflation, recession, and even inflation. A lot of those perspectives shifted as we went through the year. When we were in spring, we saw a very strong market in Calgary, something that was unique to this city compared to the rest of Canada. We actually saw phenomenal gains at the first 6 months of the year. But as we shifted to the second half of the year, for the second 6 months, we saw consecutive losses for those remaining 6 months all the way back from July. The expectation in the middle of the year was that when rate cuts happened, a lot more buyers would come off the sidelines compared to even what we've seen in the last 2 to 3 years in Calgary. And while that did happen, but in a very different way, is buyers actually did come off the sidelines, but they were not actively participating in the market. I had a lot more new buyers actually contact me in that second 6 months. But because of the high amount of job uncertainty, political situations, which we will discuss in more detail, everyone still remained extremely cautious. And versus trying to jump into the market right away, they were waiting for finding the right opportunity, and they still are, but also holding out for better interest rates, which might not always work out for the best, depending on what you're looking to do in the market. Overall, sales did improve for detached properties priced above 600, which we hadn't seen before. And there are primarily two reasons for this. It's because inventory for that particular segment of the market did increase, and also the affordability for buyers on that upper segment that were trying to move to Calgary for affordability were now able to pay that little extra and get qualified for a bit more because the rates were coming down and afford those better homes, which even though they were priced above 600 were not expensive compared to the rest of Canada. An interesting side effect that we saw from all of this was even though prices were climbing for those properties that were priced above 600 and we saw more sales happen in that segment, still people were getting priced out because even though there was more inventory, it was just not enough to keep up with the amount of buyers that we had for that segment. So we had a lot of move down buyers where buyers initially trying to reach out for those detached properties will then go for semi-detached properties in roughly the same price range, same square footage, and same bed bath configuration, and still get a very good location, very good property just in the semi-detached segment. And that's another shift that I noticed last year is we were not able to cater to people looking for semi-detached properties in the past 2 to 3 years because there was just not enough inventory. But last year, we actually saw an increase of inventory overall across all semi-detached properties. Not necessarily that most of them were in the affordable section. A lot of them were still a bit expensive, but nothing compared to the detached properties. As far as rest of the market is concerned, there was an extremely high growth in inventory contributed by new listings growth every single month. And that has recently declined as we ended the year in winter. So for November and December, we saw a significant drop in new listings, leading to inventory actually being absorbed. As far as the sales go, the sales actually held relatively strong. They declined, but not as much as the relative growth that we saw in new listings and inventory growth. So because of that, a lot of the buyers were able to absorb the inventory, but then we didn't have extremely competitive conditions and multiple offers and bidding wars like we did in the last 2 to 3 years. But now, as we've ended the year, we've ended with a very high amount of apartments and townhouses which is a very different picture from what we had 2 to 3 years ago. As we transition from 2024 to 2025, I do expect that a lot of this additional inventory will get absorbed now as the sales continue to persist heading into spring. And then once we go into spring, I do think we will get a lot more new listings, which will then bring the inventory back up. The question is, will the sales hold? The next factor that affects Calgary's real estate market is supply versus demand. More specifically, the population growth that Calgary has seen over the past 3 years. It's no secret that Calgary's success and growth in the real estate market over the past 3 years has primarily been driven due to net migration, not just from other provinces, which is interprovincial migration, but also international migration, as it becomes a popular spot for international migrants to directly land in Calgary first. The real issue in the same time period, though, has really just been inventory. New listings haven't been able to keep up, while sales more or less remain consistent with minor fluctuations year over year for the past 3 to 4 years. Inventory was the real problem for why Calgary had to see the amount of growth that we did because of the high amount of demand from net migration. Considering that population growth was such a driving factor for the amount of growth that we saw in Calgary, I do expect some level of correction in sales going forward into 2025. So even though we are seeing interest rate cuts, we are seeing other factors that are bringing buyers back into the market while they remain cautious, I still expect an overall correction in 2025. We've already seen a drop of 31% in Calgary as far as net migration goes, and this accounts for both international and interprovincial migration. Now, this 31% for Calgary is actually one of the lowest as far as all provinces go. So Calgary still stands to do better than the other provinces as far as impacts go from net migration, but we will definitely see an impact because 31% is a big percentage of people, especially for a market so strongly driven by migration. The other factor that we should also look into and is often neglected because usually it's not an issue is e-migration. E-migration, which is reverse migration or the mass exodus of Calgary or Canada as a whole, has become a very hot topic. And normally the amount of people that leave Canada was pretty negligible. Off late, it's starting to become more and more of a significant number. Now, when compared to as a percentage of the total population of Canada, it actually isn't even that much. But when you consider that we are dropping the levels of total incoming migration, but at the same time seeing people leave, it can have some impact. The good news on this front, though, is that even though a lot of people are leaving Canada as a whole, when you count that as a percentage by province, Calgary is actually one of the smallest contributors to that. So Ontario is where most of the people are planning to actually leave Canada, and therefore I expect lesser impact on Calgary's market specifically, but it might actually have an impact on Vancouver and Ontario's market. Another factor to consider on the supply side is the high amount of mortgage renewals that are due for 2025. A lot of these people locked in extremely low interest rates way back in the pandemic time, and now they're up for renewal. And while a large portion of them are from other metropolitans such as Vancouver and Ontario, a small percentage is still from Calgary. And so while those people hit their renewals next year, they may potentially upsize, downsize, or just decide to sell. Either way, that will lead to more listings when we head into spring, resulting in more inventory and more options for buyers. And if the buyer pool doesn't keep up to the amount of inventory that shows up on the market, then we could see a price correction happen that way. However, if we just purely look at what's happening in Ontario, Ontario has now built up extremely high amounts of inventory, way more than Calgary. And as far as apartments go and Toronto goes, the new construction and new sales market is doing terribly. Even resale market for apartment condos is at their all-time highs in terms of the amount of months of inventory they have. But despite that, there's so much resilience in the price in terms of what discounts we can see happening in the market, the price drops, what people are willing to pay. And because the price still persists in those markets, even though a lot of people have seen significant losses in the past 1 year when it came to Ontario, it's still no longer not enough to aim for the significant correction that we actually need for Ontario to remain affordable. And so what you could end up seeing is still constant pressure from people in Ontario looking to move to Alberta, as Alberta remains relatively affordable compared to Ontario. Overall, I do expect Calgary's market to reach more balanced conditions going into 2025. Gone are the days where a property is sold from the market within an hour of it being listed, or there being over 30 offers over a weekend, and bidding wars that end up people paying 200,000 or more above the list price. Now, while the first 2 points have been more on the lighter side and things that we already knew about the Calgary real estate market based on my market reports from different months, if you've been keeping up or just watching the news and seeing what the market sentiment is, the next 2 points are a little bit more of a hot topic on things that are happening currently in the market and how people are viewing 2025 going forward when it comes to trade relations of Canada with other countries, but also the political situation that's happening within Canada. So that being said, let's get into the third point, which is the political landscape of Canada. So it's no secret that the current Liberal government has already messed up when it comes to their time in the Parliament for the last couple of years. All their policies have pretty much failed Canada on all fronts. And so obviously, even though now they're going to have new people coming in to be the face of the party and a supposed temporary prime minister, I really don't think they have much of a chance when it comes to elections. Most of the country is now rooting for a conservative government with Pierre Poilievre as the head, and he's most probably going to be the next prime minister. So that being said, how does that affect not just Canada, but Alberta and what Alberta's infrastructure and resources and what are we capable of as a local economy? Alberta has always tried to maximize in terms of oil and gas. That has been our primary industry. But not just that, even mining. Alberta has so much to give for mining, but our policies on a federal level when it comes to environmental protection acts or just other red tape that gets in the way of us being able to maximize the number of resources that we have has always been an outstanding issue. And in my personal opinion, we should actually be one of the richest countries in the world. We have huge potential in not just being able to make full use of our land. And I'm not saying this at the cost of anything environmental, but there are ways to get around to doing these things more efficiently. And a lot of countries around the world have set example for that. But that being said, we actually have the potential to do really, really well if we maximize the use of our land. And Alberta has always been on the forefront and spoken towards that. So not just oil and gas, but also general mining. We have some of the most mining companies here, but all our mines are outside Canada, and there's a reason for that. Even though Alberta has access to so much oil and gas, we've just been shutting down refineries on the federal level across the country over the past decade, and this has resulted in us needing to send all our crude oil over to US, which has more and more refineries to then process that oil and send it back to us. So not only do they get it at a discounted rate, but then we pay back more for our own oil. And this is totally fine since they are our largest trade partner. But now lately, with the political scenario between Canada and US shifting to US threatening to put tariffs on Canada, that has brought everything into question. At the point of this recording, Trump has already now taken office today, and you might see this video at a later point. But what I'm trying to say is, initially he did say that he will put the tariffs on day one. In my personal opinion, I already knew that was going to be a death threat. There's no way day one he would have put a 25% tariff on Canada. And a lot of that has to do with the heavy dependency that US and US's GDP also has on Canadian resources. So currently with everything that we already export, excluding just even the oil, the amount of things that go back and forth across the border, not just in Alberta, but in Ontario and even in Quebec, it would put both sides at risk. And so my personal opinion is that with Trump's tariffs threat, he is not really concerned about the trade surplus that he is actually talking about. The real shift in opinion here is how people perceive China now. So China has some of the largest rare earth metal mines across the world. And these are extremely important to a lot of industries going forward, such as semiconductors, which is now heavily going to be contributing towards the AI industry and data centers that we need going forward. And with the improvements in technology, there's more and more of a dependence, not just on the tech side, but also on a military side. And with the shift in the last 2 3 years of US trying to push away from China, their closest trade partner who has access to almost the same amount of resources, if not more, is Canada. But Canada has been very passive when it comes to mining these resources. And not just that, Canada has also not invested a whole lot when it comes to their military. And we have actually fallen back to our targets of what we were supposed to hit with military investments. And that's just us getting complacent and having a dependency on US. And so that is the true sentiment I think Trump is trying to call to light behind the scenes and try to push and nudge Canada to be more proactive in taking charge. And this couldn't come at a better time with conservative government taking the throne in Canada, but also Alberta having a conservative government already in place, which then has access to all the heavy resources that Alberta can contribute to US. So we already have established pipelines, not just across US, but from Canada to US. And Trump's not going to put all of that on the line with these tariffs. Of course, US will see a lesser impact from these tariffs than Canada. Canada is predicted by Bank of Canada to see a -6% drop in GDP if these tariffs actually come into play. Now, that being said, my opinion is not that they won't put tariffs at all. What might potentially happen is they might start slow. They might do something along the lines of 3% or 5% to make their threat real. But 25% is way too high. Not only will it crash the Canadian dollar by 20-30%, we're already below 0.7, and it's been that way for a while now. So that together with Trump's tariffs will put us in a stagflation environment. Stagflation is where the economy stops growing. So you have negative or zero GDP, which in real terms we already are. We are already in a recession when it comes to GDP per capita. For the last 16 months, we've been essentially in a recession when it comes to GDP per capita. The only reason we are able to show positive GDP growth is because of our population growth. But now with even that stopping starting from next year, or even this year actually, with all the non-permanent residents expected to leave Canada, we're going to see a relative population decline. So we're not going to have that much of an upward pressure on overall GDP. So GDP per capita will decline, continue declining. And if these tariffs actually come into place, we will also see continued inflation, very sticky inflation, because everything will become significantly more expensive, not just to produce, but to hire employees. So you'll see mass layoffs, and it will affect the economy overall. So Canada is obviously not going to stand for this. And as far as taking an aggressive stance, there's only so much we can really push back to a superpower such as US. So US, our best bet is to come to the negotiation table, and I completely agree with what Premier of Alberta is doing to showcase how we can be a very strategic partner. And to me, that is exactly what Trump wants. Trump just wants to shake Canada up and make us realize of what we are truly capable of and build that relationship with US going forward. And so once we get past all of this, I do think that US and Canada are going to be very strong trade partners, even more than before. And there's going to be a lot more policies that will come in place that will benefit both countries and create something to be reckoned with when it comes to the global scenario on politics. So, to boil all of this down and where we land as a country, but also for Alberta, I feel Alberta is very strongly positioned, not just for resources, but as a strategic partner with pipelines in place and good people in power, in position to actually create those negotiations and put the right things in place for people now who move here and live in Calgary, Alberta. And even Edmonton and North will benefit a lot from all those mining resources and data centers that's being opened in Grand Prairie, for example. So that is another very strategic point that Alberta is trying to use, with our weather perfectly acclimated to help with creating more data centers, but also the natural renewable resources that can run those data centers. We are going to become a very valuable resource to US, and a lot of the companies are going to open more and more data centers going forward in Alberta, which will then create more jobs and more economic power for Alberta to stand on its own. And I believe with conservative government coming on the federal level, Alberta is going to see a direct benefit with that in terms of common objectives, lesser red tape, easier clearance of projects, and finally we'll be able to reach our full potential. So that's why I'm very optimistic on the Alberta market as far as mid and long term goes. Short term, there are a lot of things to iron out, not just on the local political landscape, but also with US. But once the objectives of what Trump's trying to achieve becomes clearer to the local politicians, which is, I think, just really get more resources out and help US benefit from that in terms of the AI industry, semiconductors, because they've really seen the threat of what happens if Taiwan Semiconductors, for example, gets invaded by China. Then considering that 90% plus of semiconductors across the world really comes from Taiwan, and US has little to no control over that, with apart from threats to China, they need to bring those industries inbound into US, but they need resources for that. And Canada stands at a very strong position to contribute to that sector. And I believe with everything that Trump said, even before he took his presidency, if you watch everything that he says in 2024, his opinions on Twitter, everything from 2023, all of this actually starts to make more and more sense, because he is obviously very, very opposed to Chinese companies and China's ability to control a lot of the trade relationships and build trade wars with other countries and control the narrative that way. And US wants to get out of that loop. Now for the next point, we're going to talk about economy factors, which is going to be a tangent off still from the political scenario, but we're going to understand in depth how Canada has been performing. And obviously, it's no secret that Canada hasn't been doing really well in the last decade. So US GDP per capita sits around 81,000 or 83,000, and Canada's GDP per capita is around the 50,000 range. So obviously there's a big difference in how US is performing and Canada is performing per capita. And why is this exactly? If we look at the investment per worker, which is basically purchase of new machinery, implementations of new processes, pipelines, anything that can improve workforce efficiency, the US supersedes Canada's. US invests $28,000 per worker, whereas Canada only invests $14,000 to $15,000 per worker. So we are at half of what US does. And obviously that shows in our output. What is the output difference then, you might ask? So for the same exact hour of work that is put in US versus Canada, we generate $50 per hour, whereas US generates about $80 per hour. Now, of course, when you look provincially, Alberta's numbers are higher, but as a country, we are way behind the US as far as productivity, investments, and overall GDP goes. And so that the more and more problems we see on the GDP side, which has been declining for the last 16 months, the lesser money then you have to put on investments per worker, the lesser efficiency you get out of the worker, and overall we have a productivity problem on our hands. Now, due to this productivity problem, obviously it has led to high amounts of unemployment in the past year. We saw exceedingly high amounts of unemployment, but now those numbers are starting to come down, but very, very slowly. And depending on what happens on the political landscape with tariffs from the US, it is potentially going to rise up again, especially if we see an actual full-fledged recession, not just a GDP per capita recession. And this could be further accelerated by what Trump is doing when it comes to corporate taxes. He is pledged to drop the corporate taxes in America, which makes US far more appealing for private investments and companies to move over to US. Since 2015, over $500 billion in private equity investments have actually shifted from Canada to US because US is just a better capitalistic society and presents better opportunities for companies to succeed. So that is why there has been a decline in investments, and private investments in an economy like Canada and US is extremely important for success. That's what brings about new communities, developments, more workforce, more employment opportunities, and chances for growth and better GDP overall. As I mentioned before, if what I think is going to happen, Alberta will see better alignment when it comes to federal policies with conservative government taking over federal. And if that happens, we should see more and more private investments coming into Alberta, whether that's data mines, oils, or just mining of resources. And if that happens, then we can see potentially a lot of growth in the local industries, which will present more employment opportunities and lead to population growth, which then will have an impact on the housing market. But not just Alberta. Canada overall needs to figure out how to create more investments opportunities within the country. And these opportunities can only be created by creating competitive policies compared to US to make businesses more compelled to open offices in Canada and provide the talent and the resources, which I do think we have with all the immigration that's happened for those companies. But this can only be done if the local economy landscape is appealing enough to those. And we need policies in place, whether that's subsidies or tax policies. We have one of the worst taxing policies, even for corporates, when it comes to compared to US. And as far as us celebrating the amount of job creation that's happened in the market, November or December reports were around 90,000 jobs created, but actually 40 to 50% of those jobs are all public sector. So the government has been on a crazy hiring spree over the past 2 to 3 years, significantly increasing not just their workforce, but also the tax burden that has been on the country, because all those salaries need to come out of public money and not just full-time employees. The issue has also been that government of Canada has spent apparently over 20 to 22 billion dollars just on consultants for the public workforce. And personally, I really haven't seen the benefit of hiring any of these consultants, especially not when it comes to public infrastructure or any projects that can actually help the general population. Instead, all we've heard about is stories of stupid applications that were created in the basement and paid for in millions of dollars. So I'm not entirely sure where all this money is going and what the true benefit of it. If any of you working in the public sector have more insights into this, I would love to know more. But now going back to my earlier point, Alberta stands in a very strong position when it comes to trade relations and also direct benefits from any policy changes on the federal level. And therefore, I'm actually very optimistic on this side, and I would count economy factors as a tailwind instead of a headwind for Alberta, despite the short-term challenges with tariffs and everything else that we've discussed previously. I do think that overall the landscape will develop to be something that is extremely fruitful for the province and thereby also benefit the country going forward. I really do hope that going forward the AI sector and data centers that are now opening more and more offices in Alberta will continue, because we do have huge amounts of natural resources, renewable resources that can be very, very beneficial. And hopefully we can bring back some of that talent to Canada. We have lost. I used to work in the tech sector, so I know this directly. We've lost a lot of talent. We are capable of essentially creating multiple Silicon Valleys within Canada itself, and we have had access to all that talent. But all those talents, we have heard so many stories of companies that were initially created in Canada, but then left out to the US just because it was a better political and economic landscape for that company to grow. But I really hope we can bring back a lot of those people. Now, the final topic that I think is going to have a huge impact and say in what happens in the housing market going forward, but also very little control or impact depending on the stagflation environment, potentially if we enter that, or what happens with the trade relationships with US. And when I say the third topic is actually rates. And I don't just mean mortgage rates, but I also mean inflation rates and also GDP per capita. So starting off with inflation rates. Now, inflation did drop to 1.9% from 2% in November, But obviously, things are still not getting cheaper, and this is also in direct comparison with that overall GDP. So, GDP per capita declining constantly, with wages not keeping up to inflation, and the Canadian dollar dropping value consistently has led to really tight scenarios for most Canadians. There was a study that I read recently where over 50 to 60% of Canadians are actually living paycheck to paycheck, and over 70 to 80% of Canadians are actually living in high economy uncertainty. They are not sure of how their savings and everything's going to pan out when it comes to a 3 to 6 month scenario. And so that's a terrible situation to be in for an entire country. So as far as inflation rate, even though it's coming down a little bit, overall we are significantly more expensive. Both rents and food compared to September 2021 is actually 20% higher. And as far as just the CPI is concerned, compared to September 2021, we are 12% higher. And I'm sure a lot of you will argue that things feel even more expensive than just 12%. As for mortgage rates, what I'm expecting as far as 2025, and a lot of big banks and everyone's consensus is around this, is overall we should get another 75 basis points cut, which is 0.75%, across potentially 2 or 3 cuts going into 2025. I do expect there is a 60% consensus that Bank of Canada will cut on Jan 29. However, when it comes to the bigger picture and all of this, I think it's an accepted thing that the Canadian dollar is the one that's going to suffer in all of this. And for a while, we are going to see the Canadian dollar drop for a while, unless we are able to improve our economy and productivity, which will also take some time. A lesser known fact is that when we cut rates, the further and further the spread between Canada and US as far as interest rate goes, the adverse impact from that actually comes on the Canadian dollar. And so that's why the Canadian dollar drops more and more. And if we create more than 100 basis point spread, that is actually very bad for our local currency. So overall, to summarize it, Canada has a lot of headwinds and tailwinds obviously going for it, and which is why we are in such uncertain times. Bond rates keep fluctuating up and down, inflation keeps fluctuating, unemployment numbers keep fluctuating, and we really can't rely on any single 1 month report. We really have to sit and just be observing the longer term trends and see how this all plays out. There are huge opportunities, but there are also potentially a lot of things that can go wrong, especially with both countries electing new governments and a lot of new policy changes that are going to come into place. So on a micro level, I do think Alberta itself is geared towards a lot of success and maybe a lot faster than the rest of Canada. Canada overall will take some time to recover and has more headwinds going for it versus Alberta. Alberta has more tailwinds, and therefore I feel Alberta is going to see that success, and that will have a direct impact on the housing market going forward. When we specifically look at Calgary, I think Calgary still has a lot going for it in 2025 as far as international and interprovincial migration goes forward. I know those numbers are going to drop on a federal level, but on a provincial level, for whatever numbers, whatever people are looking to find better opportunities and move to Canada, I'm still getting a bunch of clients, surprisingly, from UK who are moving to Canada. I've seen an increase of that over the last 1 year, and that seems to be continuing into 2025. I know UK's economy situation is also not that great, and there might be something to do with that, where people are looking for an opportunity in Canada. A lot of those people were in Canada before, left for the UK, and are now coming back. So that's going to be an interesting thing going forward. And I feel with as far as population growth goes and trying to bring the best talent, Alberta does stand on the forefront to attract those opportunities. That being said, I think we are definitely done with the crazy times that we've had in the last 2 to 3 years. Compared to last 2 to 3 years, Calgary is going to see a weaker housing market. And what I mean by that is we're no longer going to see 20 to 25% gains year over year. We might potentially average closer to the 5 to 7% mark. Now, of course, I don't have a crystal ball, so don't quote me on this. But I do think that as far as affordability goes, economy opportunity goes, and just in terms of having a premier who is so geared towards finding success for Alberta, I do think that we can still see good opportunities, and the economy will expand locally going forward into 2025, just not at the rate that we saw for the last 2 to 3 years. As we will start heading more and more into the spring, we should see more balanced conditions across all segments of the market. I do not think that we will head into a buyer's market at all. In fact, certain segments that are well-priced properties and really high appeal properties in really good areas with great schools will still continue to see multiple offers. We've already started seeing an increase of that. I will put out another video about that, how we are seeing an early spring market in very specific segments. So do keep an eye out for that. But so I do expect multiple offers, but not bidding wars to the extent of a property going off the market within a single day. But we will see people pay good dollar for those homes that really stand above the rest. Towards the end of 2024, we actually saw an increase of buyers more and more for pre-construction properties very specifically. And I do think that trend will continue going into 2025. Calgary has done very, very well. Alberta has done very, very well when keeping up to housing starts. So while across Canada, most places, especially GTA and Vancouver, have seen a drop in housing starts and done terribly on that front, we've actually managed to create a lot more homes and even brought the national average to a positive, which is a 3%. But locally, we have seen a lot of housing starts over the last 1 year. A lot of that inventory is being absorbed as people are then able to lock in a rate early and keep an eye out for not being committed to a mortgage just yet. So pre-construction still has its appeal. The amount of buyers relatively has dropped compared to the peak that we saw at the start of last year's spring. But because that has happened, guess what? Builders are also offering more and more incentives. A lot of builders, especially in areas in the southeast, are offering free basements and everything, and additional even garage done up and everything. So depending on what's more important to you, you could get different things done by the builders and actually leverage the inventory that has been building up because of the high amount of housing starts that we had in 2024. Another trend that I expect going into 2025 is more real investors. And what I mean by that is reduced speculation. So because Calgary was seeing significant growth very quickly year over year with 20 to 25% gains, we ended up attracting a lot of speculators, especially from markets like Ontario, where people love to speculate with no intention of taking possession of the home. Local builders actually hated that to a point where we never really had assignment clauses as part of the purchase, but then more and more builders started putting that in just because that's the kind of investors we were getting. We were getting people who just wanted to speculate on the Calgary market, and they would end up shooting the prices up because all the inventory would get taken up, but then they wanted to sell it right before the sale. And I've seen a lot of things go wrong, and this is where you need to be very, very careful. I've actually seen people in Ontario buy pre-construction homes thinking it was in Calgary, and when they approached me to actually sell that property right before possession, the property wasn't even in Calgary because the local realtors who guided them to that told them it's in Calgary, and they assumed just the Calgary area, but it was actually either in Okotoks or Chestermere, near neighboring cities around Calgary, but wasn't actually in Calgary. And so this is something you need to be very careful of, and therefore make sure you reach out to me if you're looking to use a local realtor. It's very, very important to get accurate information, not just on Calgary as a city, but local neighborhoods. But that aside, I think all the speculators are going to now start leaving the market slowly, especially as GTA markets open up again and they start seeing their gain. So what I mean by we should only have real investors left is people looking to invest, improve homes, and actually have long-term rental properties and provide value back to the market and not just short-term flips, because of course the price range has grown significantly. So now it becomes a lot more difficult depending on where interest rates go. But of course, it becomes a lot more difficult to justify the risk, especially with the economy situation and recession and all of that. So we should have more actual buyers for their primary homes and then long-term to mid-term investors. and hopefully lesser speculators is what I'm expecting going into 2025. And finally, another big trend that I do expect going forward is a real shift away from townhomes and apartments, which was all the rage because of a complete lack of inventory over the last 2 to 3 years. So a lot of people were forced into townhomes and apartments, not just because of lack of inventory, but also because they were extremely affordable. But now, with as expensive as the townhomes and apartments have gotten, a lot of people are just seeing the value to increase their budget and start getting into semi-detached and detached instead, even though those have also gotten pretty expensive. But we are seeing a growth towards detached and semi-detached. We're getting more luxury buyers in Calgary now. The amount of inventory has increased for detached homes above 600,000 significantly, and we are actually seeing buyers starting to match that segment of the market. And even though if people are not able to afford the properties in the detached segment for above 600,000, what I am seeing happen is they are moving down to semi-detached, because semi-detached suffered from inventory, a lack of inventory over the past 2 3 years. We had very, very few semi-detached in every single community, and because of that, the options that were actually available weren't that great. So people had to move up or move down, so move to a townhouse or try to push their budget and go into a detached. But now a lot of the people that are not able to afford those detached properties are finally able to move back down and get really good semi-detached properties. So a trend into 2025 essentially is that detached and semi-detached, I think, is going to do significantly well, even though they lagged behind compared to the townhouses and apartments in the past 2 years. And so that's the overall summary, my predictions, and what I think is going to happen on the political landscape, the economy, and everything. We try to cover it from all fronts. If there is something that you feel can really dramatically shift and affect the Calgary market, the Canadian market, definitely let me know. I would love your opinions on that, and I would love to reply to your comments, maybe potentially even make another video to cover those topics if I find something truly valuable. And I really enjoy your insights that you guys take the time to put into the comment section. And I hope you found this valuable. All the very best with investing in 2025. And if you need any help in the Calgary real estate market, obviously reach out. I would love to discuss all of these with you directly on a call. There is nothing like it because we have a lot more organic conversation, and we discover things as we chat on call usually. All my contacts are in the description. I will also put them on screen. And thanks for staying tuned, and I'll see you guys in the next video.